Exam Scholar, Real Estate Edition.
Question 1. If brokers of different offices agree to set commission rates at a particular level, this would be a violation of A. The J. Edgar Hoover Antitrust Act. B. The Sherman Antitrust Act. C. The Anti-Monopoly Act of 1932. D. The Sherman Antitrust Act. Answer. B. Brokers of differing offices have faced severe punishment by conspiring to set rates because this is a violation of the Sherman Antitrust Act. Question 2. A lease that allows a landlord to collect money based on the amount of sales the tenant's store produces is A. Illegal. B. Called a percentage lease. C. Called a net lease. D. Called a pocket lease. Answer. B. A percentage lease is a lease in which there is a base rent as well as a percentage of the gross sales is due to the landlord after a certain threshold is met. Question 3. The type of listing that is the most risky and open to fraudulent activity is called A. Pocket. B. Net. C. Exclusive. D. Gross. Answer. B. Net listings are when the agent keeps the sales price above a certain amount and can subject the broker and agent to have their licenses suspended or revoked. Question 4. When a building and a land are appraised separately, this is which type of approach to appraisal? A. Market. B. Index. C. Data. D. Cost. Answer. D. In the cost approach to appraisal, it is required that the building and land be valued separately. Question 5. What does mortgage insurance cover? A. The amount of the loan in the event of the borrower's death. B. The lender in the event of a loss. C. Job loss or accidents that render a person unable to make mortgage payments. D. Incapacitation of the borrower. Answer. B. Mortgage insurance covers a lender from losses. Question 6. What does mortgage life insurance cover? A. Pays off the loan amount in the event of the borrower's death. B. The lender in the event of a loss. C. Job loss of the borrower. D. Incapacitation of the borrower. Answer. A. Mortgage life insurance covers the amount of the loan in the event of the borrower's death. Question 7. If Sam wishes to secure a real estate loan with the inventory of his furniture store, under the Uniform Commercial Code this would be A. Legal. B. Legal as long as the inventory equals the loan amount. C. Illegal because the inventory is considered a fixture. D. Illegal because the inventory can be sold and cannot secure a loan. Answer. D. Because the inventory will eventually be sold off, this is not sufficient to secure a loan under the Uniform Commercial Code. Question 8. A contract that is binding between the buyer and the seller, as well as conditional delivery of transfer instruments to a third party is required for A. A transfer of title. B. A valid escrow. C. A person to buy a house. D. None of these. Answer. B. In order to have a valid escrow, there must be a conditional delivery of transfer instruments to a third party as well as a binding contract between buyer and seller. Question 9. In the case of a cash sale, why would a seller wish to transfer an existing fire insurance policy? A. Because then they don't have to worry about a new policy. B. Because it is more convenient this way. C. Because they will not have to pay a short-term cancellation rate. D. Because there is no need in a cash sale transaction. Answer. C. Sellers are typically more likely to want to transfer an existing fire insurance policy because they will not have to pay a short-term cancellation rate. Question 10. If a Chinese person calls an agent and asks to view property in a particular area of town that is known to house many people of Chinese descent, this would be A. An example of steering. B. An example of blockbusting. C. Perfectly legal. D. Illegal. Answer. C. In any case in which a person wishes to view a property, regardless of race, this is viewed as a perfectly legitimate opportunity and should be treated as a normal client.
Exam Scholar, Real Estate Edition.